Hello, good day, guys. My name is Nick, technical analyst at SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the Australian dollar to the New Zealand dollar. And as first, we will be talking about fundamental analysis before we move right down ahead to technical analysis, which is going to be purely what we'll be seeing on the chart. We have noticed that the AUD NZD pair has climbed to near 1.1044 as the RBA has featured a rate hike by 25 BPS, and an unexpected hawkish tone from the RBA has set the anti-podium on fire. While the Kiwi bulls are waiting the release of the employment data, the AUD NZD pair has surged above 1.1040 as the Reserve Bank of Australia (RBA) sounded hawkish in its monetary policy meeting. RBA Governor Philip Lowe has stepped up its interest rate for the very first time since the pandemic of the COVID-19, while the Australian Central Bank has unexpectedly elevated its interest rates by 25 basis points at up to 0.35%. The extent of the rate hike is higher than the preliminary estimate of 50 BPS. An aggressive tone, of course, has been adopted by the RBA to leash the rise in inflation. And the Australian Bureau of Statistics reported that the yearly Australian inflation at 5.1%, much higher than the estimates of 4.6% and the prior print of 3.5%, has signified a higher price pressure, have compelled the RBA to feature a hawkish tone, of course. As per the commentary from the RBA Lowe, the agency is committed to doing whatever is necessary to ensure that inflation in the Aussie area could return to target over time. Meanwhile, the Kiwi bulls are eyeing the release of the unemployment rate, which is due on Wednesday. The New Zealand jobless rate is expected to land at 3.2%, in line with the previous figure, adding to that Statistics New Zealand will report the employment change at 0.1%, while the Aussie area will report monthly retail sales on Wednesday. Preliminary estimate for monthly retail sales is about 0.6% against the prior print of 1.8%. Now, what effect has this been having on the chart? We have noticed the total last price of 1.1035 and total daily change of 0.077 and a total daily change of approximately 0.70. And the total daily, today's daily open was at 1.0958, and the trends of the daily SMA 20 and daily SMA 50 had it at 1.0906 and also at 1.0805. We have also noticed that the daily SMA 100 has been at 1.0733, while daily SMA 200 has been at 1.0589. We have high levels of previous daily high up onto 1.098, and checking our daily time frame, we have seen a continuation of our previous weekly high at 1.0994 and also previous weekly low at 1.0819. And for the monthly high, we have noticed it to be at 1.1, while the previous monthly low had been at 1.0762. Of course, we have much expectation of the upside in recent times. So to have a confirmation of this, we are most likely going to have a pullback down to cover this, push up to the upside between the 1.10254 zone and 1.010, or rather 1.09844 zone. So before that, we have a probably push up to the upside. So let's see, with a pullback down to this point, we're looking at nothing less than 35 pips. With scalping trader, you can just quickly have a quick scalp of this, and it goes back to the upside. We're looking at nothing less than 50 plus pips from that trade, which of course is good money. That's our technical analysis on today's currency pair, the Aussie to the New Zealand dollar. I remain your host, Nick. Bye for now. Hello, guys. Also today on the stock market, we're having a dig on Chevron. We have noticed that Berkshire Hathaway added to its Chevron bet significantly during the first quarter, making the energy stock the conglomerate's fourth biggest equity holding. The Oracle of Omaha's Chevron investment was worth $25.9 billion at the end of March. The company's first quarter finish Saturday showed a big jump from its value of $4.5 billion at the end of 2021, while the shares of Chevron have rallied more than 30% this year on the back of surging oil prices. But Berkshire's position has increased fivefold, reflecting Buffett's buying. While energy has been a standout winner this year, with the S&P 500 sector up about 35% compared to the broader benchmark of 13% loss year to date. Many oil and gas companies are also good incoming generators, offering attractive dividends. The energy sector yields about 4.7% compared to S&P's 500 1.5% dividend yield. Chevron pays a 3.6% dividend. Chevron is not the only big stock Buffett likes, of course. Last month, the investor had bought about 7 billion worth of Occidental Petroleum's common shares in additional investments, together with a $10 billion in Oxy preferred, while Berkshire's bet on the oil sector is now over $14 billion as confirmed. Berkshire's biggest holding is still Apple, which is worth about $159 billion at the end of the first quarter, while Bank of America and American Express were the two other big holdings worth about $42.6 billion and $28.4 billion respectively. The significant Chevron bet has had a dig on the market and might be able to indicate that Berkshire will not acquire Occidental despite the recent jump in the ownership. It says that energy is the most attractive place in the market for Warren, and it will take OXY private as confirmed. But Berry has first bought Chevron in the third quarter of 2020, and based on the stock prices move in April, Chevron may have moved into the third biggest position above American Express, depending on whether Buffett bought or sold any shares during the move. Now, what exactly would this have effect on the market? We have been seeing a gradual push up and most likely nearing to the most recent resistance zone after this huge dig on the Chevron market. So at the point we are getting out of the 1630 zones, we are heading up to a new zone, which is at about 169. So putting our stop loss at around 156.55 and having our TP at approximately 17.51. We are looking at nothing less than 109 pips on this trade of call, which is good money. That's our technical analysis on today's stock, Chevron. I remain your host, Nick. Bye for now.